$5 trillion. The most valuable company in human history. And most of the people it made rich have no idea what it actually sells. You've never bought anything from NVIDIA. No store, no app, no logo in your pocket. And yet every time you ask an AI a question, NVIDIA collects a toll on the answer. Today we're tearing down the greatest toll booth ever built, how the machine works, and what the stock is really betting on. Start with what they actually sell, because it's not chips. A normal processor, the CPU in your laptop, is one genius processor. Brilliant, does one thing at a time incredibly fast. NVIDIA's GPU is different. A stadium packed with 10,000 students. Individually, not geniuses. But hand that stadium 10,000 small multiplication problems, and it destroys the professor. Every time. And here's the punchline. Training an AI is nothing but small multiplication problems. Trillions of them, all at once. NVIDIA sells the only stadium big enough. And here's the part they don't put on investor slides. None of this was the plan. GPUs were invented to draw video game explosions. But rendering pixels is just matrix math. Multiply, add, repeat, millions of times in parallel. Then, in 2012, a neural network called AlexNet shocked the research world. Trained not on a supercomputer, but on 2 gaming cards. Neural networks, it turned out, are also just matrix math. The gaming company woke up owning the perfect machine for artificial intelligence. The greatest accident in business history. Except one piece was no accident, and it's the piece that matters for the stock. In 2006, NVIDIA started pouring billions into CUDA, a software layer that lets ordinary programmers command the stadium. Wall Street hated it. Gamers didn't need it. Jensen Huang shipped it anyway, free on every card. 20 years later, virtually every AI framework, every library, every tutorial, every grad student speaks CUDA. Switching to a rival's chip means rewriting your entire software world. That's not a product anymore. That's a language. And one company owns the language. Now the money. And fair warning, these numbers sound made up. Last quarter alone, $81.6 billion of revenue, up 85% from a year ago. The full fiscal year, $216 billion. But the number that should stop you is the margin. For every dollar NVIDIA sells, roughly 75 cents is gross profit. Hardware companies live at 30, maybe 40 cents. 75 is software economics, on physical objects. Margins like that aren't earned by making things. They're earned by being the only one who makes the thing. So who's writing these checks? Mostly 5 companies. Over 90% of NVIDIA's revenue is now data center. Microsoft, Meta, Amazon, Google, and friends. And they're not buying chips. They're buying entire pre-assembled AI factories. 72 GPUs to a rack. The networking to lash thousands of racks together, the software to run it all. Networking alone hit nearly $15 billion a quarter. It tripled in a year. Wonderful news. Also, file this away. When 5 customers fund your empire, their mood is your business model. So the machine is a monster. That part's settled. But you're not watching this out of admiration. You're watching because it's a stock, and every stock is just one question wearing a ticker symbol. Can anybody kill this thing? Let's genuinely try. The moat has 3 walls. Wall 1, CUDA, 20 years of developer lock-in that a faster chip alone can't break. Wall 2, pace. NVIDIA now ships a brand new architecture every single year. Blackwell today, Rubin ramping right now, Feynman already on the roadmap. Competitors aren't chasing a chip, they're chasing a treadmill that keeps speeding up. Wall 3, the full stack. NVIDIA sells the chip, the networking, and the software as one integrated system. Beat them on one layer and you still lose the sale. To take the crown, you have to breach all three walls at once. Now the bear case, because $5 trillion deserves a real one. Threat 1. NVIDIA's biggest customers are becoming its competitors. Google builds TPUs. Amazon's Trainium is closing the gap. Custom silicon could take 15, maybe 20% of AI inference. Threat 2. China is basically gone. Export bans handed one of the world's largest markets to Huawei. Threat 3, the big one. NVIDIA is ultimately a bet on AI capital spending itself. If the build-out ever pauses, even just to catch its breath, NVIDIA's income statement is the first place you'll see it.
So, is $5 trillion expensive? Here's the genuinely weird part. Not obviously. NVIDIA trades around the mid-20s times next year's expected earnings. Plenty of supermarket chains and soda companies trade higher, while growing 5% a year, not 85%. Priced against its own growth, this might be the cheapest megacap on the board. But that arithmetic has one load-bearing assumption. The growth continues. Pull that thread and the whole multiple unravels. This isn't a valuation you buy, it's a bet you place, and the market has priced it like a sure thing. So here's the actual thesis, plain. Owning NVIDIA is two bets in one. That the AI build-out keeps running for years and that the moat holds while it does. You don't need to predict the future, just watch three dials. 1. Data center growth. Is it decelerating? 2. Custom silicon. Is it winning real share, not just press releases? 3. Gross margin. Pricing power always cracks there first. As long as the dials hold, the thesis holds. The day they move, don't argue with them. In every gold rush, the one guaranteed winner sold the shovels. This is the greatest shovel company ever built, and now you know exactly how the machine works. Quick reality check. This is a teardown, not financial advice. Do your own homework before you touch anything. If chips are still fuzzy, watch our semiconductor video. It's the perfect primer. And subscribe to the lab. The next teardown is already on the bench.